Good afternoon. This is Todd Horwitz, coming from the floor of the CME Group in Chicago. And as we continue to track the 30-year U.S. Treasury bonds, we would call this almost a slow death. As we look over at the bigger picture, we believe that the bull market is now long over. The 30-year drive for bulls has now come to an end, and now it's been a slow death. This is the same as when we look at any other market that has had a huge up move over time, and of course it reaches the pinnacle, and now we're seeing some spurts to put us back in there. But basically, the markets are now over, and of course the Fed, and their ever concern to try to manipulate rates and continue to control them, is they're starting to lose control with this whole thing. And as has happened in every situation in history based on rates, the Fed has made the wrong decision. And I think once again, as we get nearer the next FOMC meeting with the new Fed chair, Jerome Powell, we're going to see that they're going to end up probably making a mistake. But the markets themselves are indicating that they want to see higher rates. And of course, the fixed income market in general is the biggest market in the world by 10 to 20 times. So there's a lot of money at stake there and a lot of things going on. So we look for this to continue to now start to fail. What we look for is that rallies are meant to be sold. Yesterday we wanted to sell 151.5 to 152. Now that we've sold back down a little bit, we now want to sell 151 to 151.5 as we continue to watch and look for these to break. Now I expect to see probably this week a test of the 149 level as a retest of lows at worst. But you will see some gyrations. We're starting to see a little bit of volatility pick up back in the stock markets, which will affect bonds at some point. You do get the flight to quality, the safety play. But overall, we're going to see lower bond future prices creating higher yields, which will also help fuel the stock market sell-off that is impending. So as we look at it, the whole picture looks to be that we want to be a seller. In today's levels, we want to sell at 151 to 151.5. And we will look for further down to pull. Now again, what I would look for as I trade these down, if we do get a quick dip back down to that 149 level, take a look at, and start to protect and guard those profits, and then look to re-add on another rally. That's the way it looks from here. This is Todd Horwitz, coming here from the floor of the CME Group in Chicago.